So by now you've all seen the rough economic news that we're getting. Inflation hit 8.6% in May. This is the fastest rise in prices since December 1981. But is anyone surprised? Not really. I guess except the economists who thought it wouldn't rise that fast. This beat their expectations. But overall, we knew this would happen. This is what happens when you just constantly print money and stimulate the economy and keep interest rates super low. You get inflation eventually. You don't always know when it's gonna come, but it's coming. And now it's here. This is payback for all the free money during the pandemic. And we've seen the market really does not like it. We're down over 2% yesterday, and it's looking like another 2% today. I'm recording this on a Friday morning, so I don't know how the market's gonna close. But inflation like this is interesting because what it ends up doing is causing more wealth inequality. And the idea of recessions play into that too. So originally, research done back in 2008 said that recessions actually help income inequality in the sense that everyone gets hurt. Lots of people lose their jobs, but also the people who have their money in the market, that gets decimated too. So it flattens out the playing field. But now what they're realizing is that recessions actually makes income inequality worse. Now, I'm not saying that we're going into a recession, but you'll see how inflation plays into this too. So if you think about what happened in the pandemic, things were bad during the pandemic, but then afterwards, workers' wages really shot up. And we're talking more like service industry workers and that level. But the stock market rebounded even faster. So all that wealth that could have been equalized, it was not. And the other thing that started happening that we're looking at now is inflation, right? So really what ended up happening is all those workers' increases in their wages, they just got eaten away by inflation now because inflation is so rampant. While once again, people with money in the stock market, even though it's been bad this year, they're still a lot better off. And when this market rout eventually ends, which we've talked about in our videos, we think it's going to be a sideways to lower market for the next year, or going into the end of the year, then when you see it shoot up again, what's going to happen? All the people with their money in the stock market, they're going to be way better off once again compared to those gig workers and service workers. And a lot of those people don't have any money in the stock market because they're living paycheck to paycheck. And not only that, but with how high inflation is now, they're going to be taking on debt to make up the difference. So you could see how, because of the stock market, the rich get richer and the poor kind of get poorer. And that's what we've talked about a lot on this channel, is the problem with keeping interest rates so low and pumping so much money into the economy and inflating asset prices. Only the more well-off people have those assets for them to be inflated. They're the only ones that benefit. So it just widens that wealth gap. Now this, we know, is a big problem long term. We've done all these videos with Ray Dalio, right? About his debt cycles and why civilizations rise and why they collapse. And a big reason why they collapse and why you have huge problems is because when wealth inequality becomes too large. And we've even talked about how it's probably worse today than it ever was because of social media. Because now if you say live in a poorer area, unlike back in the day where you'd only see people who are, around your wealth level, you get on Instagram or Twitter or whatever and you see just people super rich taking vacations constantly. New cars, new clothes, new watches. And that's beyond just Hollywood, which is what it used to be, right? You'd see all that glitz and glamour in Hollywood, but not normal people. But now everyone's an influencer and everyone's showboating online, and that breeds more anger. And it's not like it's fake anger too, because like we just talked about, that wealth gap is growing. So what are ways to combat that? How do we fix this problem? Well, that's a really tough question, because if you go back to our Dalio videos, no one has ever fixed it before, and what just happens is that the civilization collapses. That's the whole long-term debt cycle idea. But one thing I have been seeing lately that is interesting and kind of funny actually is anti-capitalist investing. Now I know, it already sounds stupid, because a big trend right now is to say that you hate capitalism. You can drive to a Starbucks in your car that you bought at a dealership and sit in that Starbucks and drink a latte while you're wearing your fast fashion clothes and say that you hate capitalism. Very stupid, but that's what's popular right now, to say, yeah, I hate capitalism. But the way I like to interpret it, so I don't get so mad, is that people hate certain aspects of capitalism, which is fine, right? That makes sense. Capitalism isn't perfect. Even though I love talking about how much I love the US, I know the US isn't perfect. Now, where I think people get real stupid is when you start saying socialism or communism is better than capitalism. But that's just not true. But there are maybe some aspects we could take from each of those to make capitalism better. Because I do agree with the statement that capitalism left unchecked ends up eating itself. But anyway, we got a new wave of young, rich, anti-capitalist capitalists. And what's that mean? Well, a lot of people are getting into their 30s now and even 1940s, and they're getting a lot of money from their parents. So over the next 25 years, American baby boomers will pass on $68 trillion to their children. And that's already happening right now. In our last video, we talked about asset raising, right? How that's the main goal of money managers and financial advisors and all that. Well, you can bet that financial advisors in particular, and hedge fund managers, everyone, they're watching this very closely. They're right in the middle of the baby boomers passing their money to their kids because they're trying to grab that money. And you'll see here when we're talking about these anti-capitalist capitalists, they're looking for specific managers too, who most of these managers are just playing on that idea. But anyway, I didn't describe what they're doing yet. So they're getting all this money from their parents, right? And they're realizing, hey, all of a sudden I'm a multimillionaire and I didn't really do much. So they've decided with all this money that they didn't really work for that, hey, I don't need all this money. I want to redistribute it. Basically, I want to get rid of it. So there's a whole group of young rich people just trying to get rid of all their money. So in this article from Recode, they talked to a person named Andrea Pine. But at the end of the article, they talk about her late father's advice on how to manage money. He said, listen, Andrea, I know you like to redistribute money, but know that you need to have at least $13 million to be absolutely secure, which Andrea thought was absurd. Now here's the thing. If this Andrea is, say, Asian, like me, and I'm Indian, then I know exactly what her dad is talking about because my dad says the same thing. They come to this country, they work super hard, they look for security, and 13 million is not a crazy number. That is what someone at that age might need to be absolutely secure. So I completely understand what her potentially Asian dad is saying. But listen to what Andrea said about what her dad told her and why she wants to redistribute all her wealth. She said, part of why I want to participate in this movement of redistribution is that my dad worked really, really hard and he was really isolated. He didn't have a lot of close friends. So I want the future to look like everyone having a little bit more than enough. Everyone being able to feel affirmed in their identities and feel connected to their communities around them, not isolated. I don't know about that. I don't know if redistribution will prevent people from not having friends. But I somewhat understand the sentiment. Hey, if we gave everyone a little more money, then they wouldn't have to work so hard and dedicate their life to just surviving. Fortunately, I don't think it would work out like that. So, okay, I'm telling you all the negative aspects of these anti-capitalist capitalists, right? They're dreamers. Just head in the clouds because most of them, I guess, didn't have to work for this money. And when you don't really have to work for the money, you're fine with giving it away. So that's the downside of these guys, okay? We love to make fun of them. We do it all the time. But they also have some really great things that they're doing, or at least some ideas. First one being even open to redistribution. Because what's the alternative to these young rich people wanting to give their money away? It's the young rich people wanting to hoard all the money. And that's something we already have a lot of in the US, and we've talked about this in previous videos, right? One of the biggest problems that we've seen over the last decade, or especially since 2009, so it's even longer, is all this wealth accumulating, like we just talked about, in this top 1%. And then that 1% doesn't know where to put their money because they want to invest it and keep growing it, right? So they shift it into things like private equity. And then what does private equity do? They take all this ridiculous amount of money that they have because of the cheap interest rates and the stock market just booming because of those cheap interest rates, and they go and they buy up entire subdivisions. So what happens when a private equity firm buys up a whole subdivision? Well, they increase the prices. And then your normal starter family can't afford a house. But they don't stop there. They don't just stop at the houses. They even go into trailer parks, mobile homes. They buy all that up and then they increase the rents and stuff and then knock people out of there. That's the Buffett playbook, Berkshire Hathaway. They do it all the time. And that's where we got to draw the line, right? You're basically ruining our economy and even our society because people can't afford housing. Not because housing is unaffordable, but specifically because so much money is coming in to just raise those prices. And that's where I see it as the top 1% hoarding that money. Now, I want to know what you guys think about this, so make sure you comment down below. But I always thought there should be some incentive for those people to, instead of put that money in private equity, where we know it's just going to go inflate asset prices that hurts people, there should be some incentive that they put it into something that actually benefits people. So if you have $100 million, I think you could take some risky investments in a new technology or a community-based project or something, right? Because your risk tolerance is going to be a lot higher. But instead, we just got this money shuffle shuffle from asset to asset, inflating everything, which is not good. Now, on the one hand, I don't believe in telling anyone what they should do with their money, right? It's their money. But on the other hand, if people are just hoarding wealth and kind of creating chaos for people because other people can't afford houses because of them, then should the government step in? God, it's scary to say for the government to step in on people's money. That's not a good idea. But this is why it's tough. I mean, what do? I think the best bet would be government incentives, perhaps. But that's why I'm interested in this young, rich, anti-capitalist movement, because these guys, even though they're a little too, head in the clouds for me, at least they're on the right track, Now, I don't believe in redistribution, which a lot of these guys believe in and they like, but I do believe in making those riskier investments. So one of the things these anti-capitalist capitalists are trying to do is actually avoid the stock market for investment. And what they're trying to do is actually invest in communities. Now, this is tricky because it's basically like private market investment. So it's like private equity, but for a local community. And it's very difficult to do because not only is it illiquid, but you don't have all the facts, right? Like you don't have a 10Q that you could go through. You don't know what the company is really doing. And it's tough to find people who even specialize in that. But I'm glad they're trying it because you got to start somewhere, right? And when you have a lot of money, you could take on that riskier bet. And what's better is that you will see immediate impacts in that community if you do it right. Now imagine investing like that instead of putting your money into the S&P index fund. Who's that really going to help at that point? Now again, when these guys say we're interested in ending inheritance as we know it and being the last generation of people being able to accumulate wealth in this way, I don't really agree with that. Even though there is something wrong with that money being hoarded generation to generation in that way. It's almost like there needs to be some evaluation. How are you spending your money? Are you buying a third yacht or are you funding a mathematics or physics department? I don't know. It's tricky. That's why I want to hear your guys' opinions in the comments because, again, we don't want to tell people what to do with their money. But we are seeing a major problem here with this wealth disparity, and it's going to come back to hurt us. Definitely comment down below with what you think. Because, before this anti-capitalist movement, there was also the ESG investing, right? Basically, the environmentally responsible investing, which, in my opinion, is kind of foo-foo because everyone became an ESG company and then there's a bunch of ESG investing. Basically, a way to make yourself feel better because a lot of this stuff doesn't actually work. Like we just said, if you're trying to be a community-driven investor, it's really difficult. There's not an easy way to do it yet. But what is easy is slapping an ESG title on something and then raising a bunch of money. Because like I said, that's always the incentive of most of these financial advisors or hedge fund managers. What's hot right now? Is it tech? Is it ESG? Let me slap that label on myself and then I'll raise all the money. So it's tricky, but the concept is there. But yeah, comment down below and let me know what you think about it. And on Tuesday, we'll be doing a deep dive into the market once again with our market review to see what's going on here. Are we already going back down to lows? Did this screw up our multi-week bear market rally that we were expecting? That's what's going to be interesting to see. And if you're struggling trading this market, you are not alone. It's been rough all year. My suggestion would be to check out our training right here, see what our Fallible strategy does because it's all automated. It's systematic. It makes life a lot easier. We are currently beating the market with very little stress and work, which is the way it should be. So if you want to learn how we're doing that, click the link in this video or down below in the description and comments. It's a free training that will show you how our strategy works. Now, I'm not going to tell you that it's not stressful at all, because like I said, this market has been brutal, but it's definitely your best bet to get a real system in place that's going to protect your money and grow it, regardless of what the market is doing. And hopefully we can all get to the point where we're shelling out money for these community projects. And if you've already taken the training, then make sure you watch our last video on the big blow up that just happened in the market. It once again gets back to people having too much money and not knowing what to do with it and just throwing it away. So watch the training, click this video, and I'll see you there.